Luxembourg leaks and Panama Papers blew the lid off international tax dodging by a who's who of the business world. Now the big four accounting firms have become the target of an extraordinary raft of tax dodging allegations from a veteran industry insider turned whistleblower. The accounting giants are accused of perpetrating tax avoidance on a massive scale, facilitating the loss of $50 billion in tax revenue each year in Australia alone. It comes amid calls to break up the globe's biggest accounting firms and ramp up the penalties for corporate tax scams. Stephen Long investigates.
When it comes to corporate tax, there's not much George Rosvani doesn't know. Now he's blowing the whistle.
The Big Four are, in my view, aggressive. I believe they're unethical now. They've lost the original foundation of the profession, and they're now involved in perpetrating the greatest tax crimes in history every year.
You'll find the Big Four in just about every major city. A quartet of global accounting firms who audit the accounts of 98% of the world's major companies and help their corporate clients avoid tax.
It's very clear to me that the Big Four accounting firms are the masterminds of international tax avoidance.
Globally, how much money are we talking about?
The revenue globally, $1 trillion US. And
in lost tax revenue?
In lost tax revenue, and I'm a conservative man. I think the figure's actually much, much higher. In Australia, easily $50 billion per annum.
George Rosvani has been a corporate tax specialist for more than 32 years. He's worked at Ernst & Young, Coopers & Lybrand, now PwC, and with Arthur Andersen. He was also head of tax in Australia for ICI and for Allianz, the world's largest insurance firm. He's been a true believer.
The original purpose of the accounting profession was to verify accounts, as it were the original whistleblowers.
Too often, no longer.
There's severe pressure from a career viewpoint to fall into line with what the firm wants. For example, it's put to you that you need to justify this result, even though from a principal's viewpoint you can never justify it. I wrote the books on transfer pricing, yes, but...
The man who literally wrote the books on transfer pricing law says its use for global tax dodging is out of control.
Transfer pricing behaviour clearly is the greatest concern, because it's very easy for a transfer pricing expert to actually shift profits out of a jurisdiction by dressing up a sham transaction as a real commercial transaction.
I don't think there's an ethical free zone that these companies or their advisors can inhabit. They are closely monitored by the ATO, by other regulators.
The head of tax at Chartered Accountants Australia thinks the critique of the Big Four is overblown.
They're sophisticated businesses in their own right, and they deserve to succeed in their own right if they're not doing anything wrong. And it doesn't appear to us that they're doing anything wrong within the current frameworks.
Today, the largest data dump in history reveals more than 11 million documents relating to the hidden financial dealings of some of the world's wealthiest people.
The massive leak from Panamanian law firm Mossack Fonseca put the spotlight on the use of tax havens. But Rosvani says that even here, the Big Four played a role.
Any large client of Mossack Fonseca is more than likely to be audited by one of the Big Four accounting firms and have its tax practices signed off.
Another revelation, the Luxembourg leaks, directly implicated the Big Four.
Sham structures have been set up in Luxembourg, again, looking like normal commercial transactions, but really with a view to being taxed in Luxembourg at 1% as opposed to a 25 or 30% corporate rate in another country. The cost to the global community is enormous.
Isolated examples like that don't, or shouldn't, in our view, paint the entire profession in a bad light.
You've written that the global community must recognise the links between aggressive tax behaviour, money laundering, organised crime, corruption and terrorism. Extraordinary allegations.
I wouldn't consider it extraordinary. They're all following the same financial saw. You know, basically tax avoidance, corruption, terrorism. The money comes from somewhere, and the money typically needs to be hidden for the purpose of the perpetrators.
You can't tar the Big Four accounting firms with that brush, though.
No, I don't believe the Big Four are involved directly in terrorism, but their structures.
He wants the Big Four broken up into smaller firms, with their tax and audit functions separated, plus tougher penalties for corporate tax scams.
Because what's happening now, that you might cop a fine, administrative penalty, it's just a slap on the wrist. If you introduce penalties in such a way that the heads of business, the leaders of business are actually jailed for tax crimes, it would send a real message to the community.
But what's wrong with the Big Four helping companies to minimise tax within the law?
There's a whole range of penalties, like promoter penalty legislation. Anti-avoidance rules can apply both to your client and in some cases to the advisor. So they're very risk averse. They're very conscious of making sure that they stay within the legal parameters and give advice according to the law, and increasingly within the spirit of the law, given all these trends that we're hearing about with multinational tax avoidance, the base erosion and profit shifting project being led by the OECD, for example.
It's an interesting point about being within the law. Many things were once legal, such as rape or paedophilia. They were all once legal. Now they're clearly illegal. If you set up a sham transaction in a tax haven with a viewpoint to shifting profits from a high tax jurisdiction to a low tax jurisdiction, this should be viewed as unacceptable behaviour by the international community.